folks. Welcome to the show. My name is David Lincoln, and the VIX reached a near-term high a couple days ago, 84 and change, and it appears like we have come off of that high, and I don't know if that's the top. That kind of remains to be seen. We're going to have to wait and see what the top turns out to be, but it seems like that might be the top. However, let me remind you of what happened back in 1980. When was this? 2008. Let's take a look at the 2008 chart for a second here, because I want to remind you what happened then. You can see here the VIX made a high, and it went way down here. It went from 89 down to 40, and then it spiked right back up to 80 again. Okay, so we want to be careful here. This is a tradable situation, but we don't want to be dealing in absolutes here. Another thing I wanted to mention to you is something that I've noticed recently. The last two closes, the VIX futures have gone down a lot right into the close, and then right after the close, they've jumped back up. So let's take a look here for a second at VIX futures activity in the past 5 sessions. And I'm looking at the April future here, which is kind of the most important one for our purposes for VIX ETPs. Here's a 5-day, 15-minute chart. And let me get out of the way and we can take a look at this together. So we can see right on the close we were way down. Into the close we sold way off in the futures here and then rip up, right? The same thing the day before, Wednesday, a big down move into the close and rip back up. And I'm thinking about why this might be happening, and I'm thinking about the at least the perception that these funds need to rebalance. You know, if you're down on the day, a TVIX or a UVXY needs to rebalance with futures. Now, Wednesday, I don't believe we were down on the day, but regardless, yesterday, we were down on the day, so people know that these funds have swelled to a big size, TVIX and UVXY, and they know that they need to sell a bunch of those futures right after the close. And so I think it's possible that people have been front-running these futures. Now, it could be just big traders who are keeping track of TVIX and UVXY. It could even be traders in the same firm as TVIX. If you think the company that's administering TVIX, if they know that TVIX needs to sell a bunch of futures, they might even just go in ahead of time, sell futures, and then buy them, short the futures and then buy them back for the fund later, something like that. Now, I'm not accusing anybody of anything. I just think you should be aware that we've seen these big down moves. Now, as is the case with the stock market, stuff doesn't usually just repeat itself. We've had 2 days of down moves on the close. It probably won't happen a third day, because that's usually what happens with the stock market. Like, people get hip to what's going on and it stops. But it does bring to mind an idea, though, which is that there is two-way trade in these products. Look at the range that we've seen in TVIX, for example, in the last few sessions. This is a tradable product. It's, if you had jumped on, at the 7, let's look at the 650 level, you could have bought it or sold it here and you would make money. I would be very careful, obviously, with this sort of thing. I'm looking more at trading things that are optionable, like UVXY or VXX. But you see these huge ranges, and this should translate into an ability to trade. I did a little bit of this yesterday where I came in, I bought some put spreads when we were a little bit higher in VXX. Small, 5 lots, 10 lots. And then once we sold back down farther, I sold some out of the money put spreads against them. And just doing 1, 2, 5 lots, keeping it small, but there's been good motion out of all of these products. It's like the Wild West out there. And so I would be cautious, but there are opportunities out there. I wanted to talk to you briefly about a situation in which I kind of messed up. And I'm telling on myself, but that's fine. I was trading this DRI and for my 401k. And so I came in on Wednesday and I bought it here. I paid 36 I paid 36.50, something like that, down here. And it immediately started tanking. Now, my 401k thing is set up so you're not supposed to like buy and sell on the same day. Like they penalize you somehow, but I paid 36 and change. I saw it start to tank and I just sold it. I sold it for a loss. I only bought 100 shares, or 150 shares, but I sold it for a loss down $2. And I was glad at the time I sold it because it went down from there to, it went down another $8 from where I sold it. But now it's come back and it's way up here. So they penalized me with a 401k and they wouldn't let me buy anything yesterday until it settled. So I was waiting around trying to buy stuff in here, and I was only able to buy like 25 shares or something with unsettled cash. But I did buy 25 shares down here yesterday, and that's looks like a $10 winner so far. But I would let these things come to you. I wouldn't chase stuff around. That's true all the time in the market, but especially in these conditions, I wouldn't think that you're never going to get a chance to buy stuff at a discount again. No, we're going to have up days and down days. So I wouldn't chase stuff. But this was just bad trading in my part. Like I said, I was long on the way up here, but I did. It's a good thing. I mean, in a way, I'm happy that I got out of it there because I would have ruined it all the way down to 26. I only lost $2 negative scalping, but still not my finest moment as a trader. So the VIX has come in. You would notice VVIX down, VVIX off the highest, but still, if you'd ask anybody online what, and I'll get to your question in just a second, Thomas. If you ask anybody, VVIX 180, that is still very, very high. So the VIX has not told us that we are out of the woods yet. I'm very encouraged that the spread between the futures and the VIX has tightened, especially between the second month and the VIX. Currently, it's only 14 points between the second month future and the VIX. That was up around 20-something points. The spread between the front month future and the VIX, it got down to like $4 yesterday. Now it's expanded a little bit. It's still to 7. So until that relationship between in the term structure straightens itself out, we're still not out of the woods here. Okay, so there's a question, who's my online broker? Now, this is a topic that I love to talk at length about, but I won't. But my point to you would be, I have several brokers, and this is due with the fact that I was trying to get discounts on commissions for a long time. Obviously, many brokers have gone to zero commission, so that's a great thing. But I would recommend having more than one account. That way, if you get in some sort of dispute with one of them or something, you can jump to the other. So currently, I have accounts with TD Ameritrade, which is sort of my main one for the VIX and stuff. Fidelity, Morgan Stanley, and Tastyworks are the accounts I have right now. Yes, that rule you're referring to is the pattern day trading rule, and that's true for all companies where you can't do 5 round trips within a 5-day period. You can't do more than 3 round trips. I believe the TD or Ameritrade one is you can't do more than 3 round trips in a 5-day period. But they do give you one get out of jail free card, which I've already used. Now, we as option traders shouldn't have any problems with that, because we can choose a different strike. If there's so many different options products that if you're trading options, you should be able to get around this rule by just, instead of, if you bought some put, instead of selling that exact put, you could just sell a slightly different strike to get out of your risk. And so it shouldn't be a big deal for options traders. However, there is this rule called, let me see if I can pull it up on my account. It's called a good faith violation. It means like you're not supposed to sell a stock until the money that you until it's settled, something like that. I'll show you without revealing too much here. Let's see if I can show you my account, one of my accounts here on Fidelity, and I've got a bunch of these good faith violations here. So let's see if I can show that to you. Okay, here we go. So this is that showing up? Hold on one sec. So this is, let me get out of the way here. It shows good faith violations here, 5 violations in the last 12 months. And this is the thing that I've getting in trouble with. It says if you accumulate 3 good faith violations on a 12-month period as your cash account, you will be restricted to purchasing securities in that account and every account with similar ownership. Now, with trading, it's like any other business. We try to game the system as best we can. So if you want to learn the requirements of your account. Now, the pattern day trading rule, if people don't know about that already, is just that you can't do more than 3 round trips in a 5-day period, and unless you have $25,000 or more in your account. So a lot of people that are watching now, I know, don't have $25,000 in your account. A lot of people, that's not a big deal at all. What you can do is you can put, if you get in a violation, you could just transfer 25 grand into your account, wait a couple days, and then take it back out, I suppose. But anyways, let's get back to the VIX and whatnot. I would make a recommendation for people, if you're maybe if you're new and this is, it's a scary situation, it's confusing, all that stuff. We talk a lot about how many fund managers have not been able to beat just the S&P 500 index over time. So it would not be a bad idea for you, actually for anybody out there, to just, while we're in this crisis, go ahead, take, I would say, maybe 20% of your money and divide it in like 5 or 10, and once a week just buy a little bit of the either USMV or SPY, because we know that this stuff has come in a lot, right? The market's down a lot over the last period of time, and so it's not a bad idea to start buying a little bit of the market. And individual stocks could go out of business, but the S&P 500 is the top 500 companies, and they rotate companies out of there. They'll add new companies to it, better companies to it, and rotate the worst ones out of it. So it's not a bad idea to just put a little money in SPY every couple of weeks. And I know, it sounds like more fun to like do all these fancy esoteric trades and whatnot, but this is a simple way to be successful, because this is a huge opportunity now that the market's down. Now, we don't know where the bottom is, of course, but much better purchase right now than it was a month ago, right? And so I personally am doing this. Every week I'm putting a little bit of money just in an index fund. You can do it. You can pick your favorite index fund, the QQQ. I like also USMV, which is a low volatility fund. It's down to 49. And in this way, as the market recovers, you can participate in that recovery. A lot of us participated on the way down. I fortunately sidestepped participating on the way down to a large extent. So, especially for me, I feel like I want to participate on the way back up. Now, we don't know if what the market's going to do from here, of course, but if history is our guide in any way, we will be higher at some point. And so, an easy way, and I think a smart thing to do is to commit a little money in a timely fashion, like in regular intervals, into the SPY. And the reason we do it in regular interviews, of course, is because that's going to average your cost. If you pick a specific amount, like let's say $500, and if you put it in every 2 weeks, then if it goes down more, that $500 will buy you more shares. Now the SPY, of course, is a $200 stock, so or $200 instrument. So you have to buy shares in $200 increments. But I think some of them will let you do fractions as well. But I would consider at some point soon here to start to accumulate down here because we will have some relief. Now, many people are flipping stocks, day trading stuff just based on the volatility here, and that's something that is certainly a possibility as well, and something that's interesting to me. I've been looking at ones that I've always liked, like MNK here. Let me get out of the way. This company, it's continued to always have positive earnings. It did get caught up in the whole Purdue Pharma opiate scandal, but it's continued to make money this whole time, and it's gone. It was starting to rally. It got it back up to $6. Now it's down to $1 again. So I think this is a good one to look at. I don't want to make specific recommendations because I don't know your financial situation, but that's something to think about. Back to the VIX. Let's take a quick look at the term structure here. I'm not going to keep you too long, and we can go to any questions you might have in the chat. So here is the term structure. It doesn't look much different than it has before. However, certain things to notice here. First of all, this number of backwardation here is cut in half. Okay, so that's huge. That starts to turn the tables towards the downside more. It's also off the high, so that's encouraging. What we'd love to see is to get this VIX below these prices and have the back month stay high. If we can keep the back months high and we can go into contango, it would be a beautiful thing if we could go into contango with the back months like in the 30s still, because it's like all this chaos is just setting up for a great move down at some point once we get things rearranged again. So there's that. Here's me. I want to thank new people who showed up. I did a live stream for a company last night, and I think it's something like 30 new subscribers popped up, and I'm not sure where they came from, but I'm thinking they might have come from that live stream. So thanks any new people who showed up. And I really want to thank I don't make money from this. I'm not trying to sell anything to anybody. The only source of revenue I have from it is either Google Ads or Patreon and the membership program. So I have a few, not too many, but a few loyal Patreon people who help support this channel. I really appreciate them for that. I've got a bunch of new members. I just started the YouTube membership program about 3 weeks ago, and I have a bunch of people who've helped out with that. Thank you very much for that. I used to have a sponsor, Gorilla Trades. I had them for a couple years, and they were helpful to me at the time. It really filled a gap for me. But the AdSense thing, many people have. If you have an ad blocker, then I don't make any money from it. Once again, I'm not here trying to make money from you. I'm here because I like being a YouTuber and I like teaching people about the VIX. If you ask any YouTuber to be a successful YouTuber, you can't be in it for the money because it doesn't come in most cases. It's kind of like being an actor. But for me, I have something that I'm passionate about that I can share with people, so that's a lot of fun. All right, enough gabbing. Sufi guy, I'm quarantined, so I'm here. Thanks for the stream. Yeah, a lot of people are quarantined and just hanging out. Is PTD really matter for accounts over 25K? No, PTD doesn't matter for accounts over 25K. And just to back up here for a second. Pattern day trading rule is ridiculous. Okay, it was made by it was a political thing that politicians, people were blaming day traders on the market moving all over the place. This is kind of like before computers were running everything, and this was the politicians' answer to blaming day traders for stuff moving around. Now, the reality is actually the opposite. The more day traders we have, the more trades that you and everybody else is doing, the more liquidity the market has, the smoother stuff runs, the more efficient it becomes, and the better off everybody is. But you can't tell that to politicians because they are concerned about what their constituents are saying, and people that don't understand the markets were like complaining to them. It's funny. I remember working at the SIBO. We went outside one time. There was always the news media there and cameras and stuff. We went outside one time, and there's all these people protesting, and I was like unaware. I asked somebody like, "Why are these people protesting?" Well, it turned out that they were Mexican people that were protesting that the peso had gone down. Now, notwithstanding that they were in the wrong spot, and we don't trade currencies where I was. They should have gone down to the Merc. I'm not even sure if the peso trades there, but it's not the trader. There's some confusion that it's somehow the trader's fault if the market goes down, and it really isn't. We're just providing the liquidity. We're providing the gears for the market to work. We don't control whether stuff goes up or down. That's other forces are involved. People shouldn't feel guilty about. You hear this thing like, "Oh, it's un-American to short a stock," this sort of thing. Really, if we didn't have the ability to sell, then there'd be no market because there has to be a buyer and a seller on every trade, right? People have asked for my opinion also about a short sale rule. I'm sort of indifferent to it. I don't think it would really affect things for that long, avoiding short selling, but I would be opposed to it just because, once again, it takes liquidity out of the market. In these times where the markets are very wide, not many people want to trade. A lot of, if you look at the spread on things, spreads are very, very wide right now. The less people that want to play, the harder it is to get anything done. And when you put some rule like no short selling in, that takes liquidity out of the market, which adds to just more volatility. So I'm opposed to that kind of thing. I don't think that it's going to stop the market from going down if it wants to go down. People find other ways of getting short. And that's that for that. Swan ETF versus USMV. I don't know about the Swan ETF. I'll have to check it out. I don't want to talk like out my ass. But once again, the important thing is not necessarily, obviously it's important which one of those two you choose, but more important is people get in the habit of saving money, of course, especially obviously in these trying times. A, B, that you do that you do choose to do the right stuff with your money. And so sometimes we get too caught up in like this esoteric trading stuff, and we lose sight of the big picture. The big picture is that we need to pay down our credit card debt. We need to have a decent job so that we have enough money to invest. We need to take care of our family, all that good stuff, and it gets lost. So many people, the average American thinks that the best way to make $100,000 is to buy a scratch ticket, and so there is a long way between what the average person in the street thinks and sees stuff financially, and probably most of you guys who are more educated and advanced. So I try to emphasize to people about saving your money. Before you worry about which fund to invest in, worry about trying to save an extra 1% of your money every year. Have a decent job, invest in yourself. Warren Buffett says the best investment is in your own education. And I certainly agree with that. Anyways, I'm getting very philosophical today, but let's check out the open. It's just about to start, and then I will leave you to it. And we are off the highs in the E-minis here. Let's take a look quickly at the market before I let you go. We did rally overnight, but it's come in somewhat. I mean, if we look at the chart here, yes, we've seen some recovery, and that's great. And I think this chart is starting to justify a lower VIX because it's starting to look like we're moving sideways more than down. Even if we, let's say we hit the lows again in 3 days, it's still, we've lessened the trajectory down. And so I think that justifies a lower VIX. So the worst could be over, but still be vigilant. Like I said, I would love to see this VIX dip below the futures. That would be a real turning point for this market. But it definitely feels like the tone has changed a little bit here in the last day. We had that really crazy spike a couple days ago, and since then it seems like the tone has turned a little bit. We're certainly not out of the woods yet. I think we need to wait to hear the crisis in the U.S. We need to see the cases peak, I believe, before we're kind of really out of the woods here. Anyway, I appreciate you listening and spending a few minutes with me today, and I will see you very soon. I'm going to put one of my favorite little songs on to end this here.
This ambiance.
Good luck today. Be careful, folks.